Hello, in this presentation we will look at the worksheet for month 2 in our bookkeeping problem in Excel, keeping in mind how this same information might be put into place in accounting software such as QuickBooks. If you would like more information about the QuickBooks Pro, take a look at our comprehensive course in the link below. First, we'll take a look at QuickBooks and discuss how the second month of operations may go through, and then we'll jump over to Excel and look at our worksheet in Excel. When considering the second month of operation in QuickBooks, we're really not going to do anything different. We didn't go through the closing process in the same type of fashion that we had to do with the worksheet, and for that discussion you can take a look at the prior presentation. And now, as we go forward, we're just going to basically go forward and enter the same information, enter the bills, enter the pay bills, enter the create invoices, do all this type of flowchart stuff we would do for the vendor section, the customer section, and the employee section as we go through those processes, those cycles within the accounting process. Different companies may have different types of closing processes, but we're going to go forward basically entering the same information. Once we go to Excel, we had to enter that closing process within Excel, and we'll take a look at the next worksheet that we'll be using in order to work through the second month of operations. Here is our Excel worksheet. It looks much like the prior worksheet we worked in the first month, but note we're on the third tab this time, and we just want to see how everything's going to tie together here so we can see how all this data is pulling together. You'll note that we have the same type of trial balance here, but as we scroll down, there's nothing below the equity section. So we have something similar to what we called the post-closing trial balance when we looked at the closing process, and that is because we haven't entered any data for the new month. So the point of the closing process is to give us this type of post-closing financial statement, post-closing trial balance, one which all of the income and accounts, income and expenses, are zero and ready for the counting upward in the next month. So all of these numbers then are being driven or drawn from the post-closing trial balance, meaning if we look at the beginning balance for all the general ledger accounts, we note that there's no activity because we're just going to start at the beginning of the month and enter the activity for the month. If we want to see activity prior to the month of February, then we need to go to the January tab and look at the GL. I'm going to click over here in the January tab. So here is the activity all the way through January. And then we're going to start at the ending balance here, 94,437, going back to this tab, back to the current tab. That's where we're going to start here. This then is being used to create the financial statements. So the financial statements, or the trial balance, and then the financial statements are all being drawn from the general ledger. So more specifically, this number is being drawn from, if we look here, the tab January close, cell 15. So if I go back over here, this is going to be this tab here. We did the closing process, scrolling up, there's the cash account. So there's I5. So it came from this tab, I5, not 15, but I5. So we're going to scroll back to this tab, going back to the tab we're on. That's how we're basically building everything. That's how everything's just going to tie together here. If we go over to the accounts receivable beginning balance, this is coming from the January close I6. So that 1,215 is going from the prior tab. If we open up the prior tab, drawing from here. So we're taking this, will ultimately be this trial balance, this whole trial balance is being used to now generate, this is the post-closing trial balance, to generate, going back to this tab, this trial balance, which will be our beginning balance, taking all of those balances on the post-closing trial balance, putting them into our beginning balances. That then is being used to generate our trial balance that we'll start with going forward from this time forward. If we scroll over to the financial statements, we'll just take a look at the financials. They're still being generated or created from the trial balance. So we'll note that we still have a balance sheet. That balance sheet is still in balance. However, the income statement has no information in it because we have nothing so far in the second month of operations on the income statement. And all we have is the beginning balance for the statement of equity, that 144,175 still found on the balance sheet here. If we scroll over to the inventory, we're still going to track the inventory item. So the inventory is still here, the data is still here to back up that inventory item, and we still have the amount of 1,944, all the inventory for the subsidiary ledger there. And then if we scroll up to the accounts receivable subsidiary ledger, we're going to keep all the detail here so we could see it, all the detail that we've done through the whole problem here. So we didn't delete that and start at 0. We're going to show that detail as well as the accounts receivable. We see the detail on the receivable, and we're also going to keep the payroll detail so we can see that activity, what we've done in terms of payroll so far. So that's what we're going to use. I'm going to scroll all the way back. That's what we're going to use in order to work the second piece of the problem. We're going to do the same type of information. We're going to enter the journal entries into the general journal, post them to the general ledger, and have a nice fresh new general ledger here. That will be used to generate the trial balance, that then used to create the financial statements. We're going to focus a little bit more on some different types of transactions than we did in the prior month. More transactions that have less to do with cash, more accrual type transactions, non-cash transactions in the second month of operations. At the end of the month, we'll also have a bank reconciliation, which is a key component, and we'll see some of the problems that arise if we have to adjust data prior to the prior month. We'll see what some of those timing difference happens when we go and make those adjustments, and type of problems you'll see if you make financial statements from month to month and then print them out and then go back into the system, and you see there's going to be a problem there, and maybe how to troubleshoot those types of problems. We'll also do the adjusting entries at the end of the second month before creating the financial statements as well.